This business about Goldbach levels.
In this Goldbach teaching, I'm going to provide a comprehensive introduction to Goldbach. I'm going to cover algorithms 1 and 2. I'm going to cover dealing ranges, the fractal nature of power of 3, hippos, and also how you can trade these. I'll also show you some trades that I took using the exact examples that I'm going to teach you today so that I can prove this analysis and this teaching isn't in hindsight, but I took these trades. Now, if you would like a comprehensive, full education on Goldbach, then I suggest you read Hoppy's book, which is the official guide to Goldbach, for which there's a link in the description to this video. If you would like me to teach you how I trade Goldbach using my golden bullet strategy, there's a link to my Discord below. Now, this is the Australian dollar chart, AU, on the 4 hour. I thought I'd use something a little bit different than EU, GU, NASDAQ, gold, Bitcoin. What else have I used? Tesla, Ethereum. I've covered quite a few assets, but I haven't done AU yet. So I thought I'd show you AU today. Now you can follow along with me. Let me show you how to load up the chart from first principles. So you go to indicators, or let's do it from here. You go to indicators and you look up DMN, ICT, AMD. There it is, Goldbach. This is how I like to configure it. I remove AMD boxes, I remove GB time. I also have the stats box on and the dealing range box on, and I have my labels in white. So let's start without the indicator and let's give you the basics from first principles. Now, classic retail trading education teaches you that the price action has dealing ranges and it trends. So you have lows and then higher lows, and then you have highs and then higher highs. And then you have these swings in price, which classic retail trading will tell you these are the dealing ranges. Okay. Furthermore, you know that these dealing ranges are fractal. So you'll have 4-hour dealing ranges, you'll have 15-minute dealing ranges, you'll have 5-minute dealing ranges, you'll have weekly dealing ranges. Classic smart money concepts will also teach you loosely about premium discount arrays. So they'll tell you about order blocks, fair value gaps, breaker blocks, liquidity voids, mitigation blocks, equilibrium, but they won't teach you where they will form. Furthermore, classic trading education won't teach you where the low and the high of the dealing range will be. They'll only show you that in hindsight. Okay? Now, what is the power of Goldbach? The whole premise of Goldbach is that every single dealing range is predefined by mathematics. So, without even having any candles on the chart, all these dealing ranges are predefined. Furthermore, within these dealing ranges, the exact prices where the premium discount arrays will form is also predefined. Now, within these dealing ranges, you also have fractal dealing ranges. So the same way you can say, if you trade the 4-hour time frame and you trade those dealing ranges or those swings, within the 4-hour time frame, you'll have, let's say, 15-minute cycles. Goldbach has exactly the same concept, where within our larger dealing ranges, we have fractal dealing ranges. However, again, with Goldbach, you can calculate exactly where these dealing ranges are. So within, let's say, the 4-hour dealing range, we will have a number of fractal dealing ranges, and within those fractal dealing ranges, we'll have some smaller fractal dealing ranges. Okay? Now, let me load up the indicator and first remove the candles. So no candles on the chart, and we have the indicator. Now, instead of using dealing ranges based off of the loose concept of time, like a 4-hour dealing range or a 1-hour dealing range or a 15-minute dealing range, all our dealing ranges are defined in a metric, And for EU, GU, and AU, you can say this is in a number of pips. So Goldbach will define that there are dealing ranges. For example, you'll have the 243 dealing range. So the dealing range is 243 pips from the low to the high. The smaller dealing range within that is 81 pips from the low to the high. The one lower than that is 27 pips from the low to the high. Okay, so I know within classic trading you have every single time frame that you can trade, from the 5 second, the 15 second, all the way to the 27 minute, the 28 minute, the 29 minute, and it's kind of difficult to know which time frame to use. So Goldbach clearly defines the size of the dealing ranges. So if we look at the 243 dealing range, which is loaded up here, what does Goldbach tell us? Goldbach defines that if price is anywhere within this box, so if price is anywhere within this box for the 243 dealing range, the low of the dealing range will be here and the high will be here. So this is predefined by mathematics. Furthermore, the equilibrium will be here, and we have a concept of extensions, which are the extremes of the dealing range. Okay, so Goldbach defines exactly where the low, equilibrium, and high of a dealing range will be. Furthermore, within a dealing range, Goldbach defines exactly where the PD arrays will form. So the rejection block will form at the bottom 3% of a dealing range. The order block will form between the 3% and the 11%, the fair value gap between the 11 and the 17, the liquidity void, the breaker block, mitigation block, then you have equilibrium, and then we reverse the PD arrays. Mitigation block, breaker block, liquidity void, fair value gap, bearish order block, bearish rejection block, and then the high of the dealing range. So now you understand the concept of a dealing range. You can understand how the dealing ranges stack. So as I said, when price is anywhere within the dealing range, the low and the high is clearly defined. If price moves out of the high of the dealing range, then you would no longer reference this dealing range because you are outside of the dealing range. The next dealing range that you would climb into would be from this low to this high. So the old dealing range's high is now the current dealing range's low. Okay, so this is the next dealing range. Similarly, if we were in this dealing range and price fell below the low, we would fall into the dealing range below it. This is the lower dealing range. Now, if I remove the indicator, you'll see that this was the dealing range we were in. When we broke the high, we came into another dealing range, which was 243 pips big. And if we had fallen below it, we would exit that dealing range and we're into this dealing range here. Now, the sizes of the dealing ranges are predefined. In this example, the dealing range we were referencing is 243 pips big. If we wanted to trade a smaller dealing range, the size below it is 81 pips. So there is no dealing range that that's 100 pips big. These numbers are predefined by mathematics. And for those who are mathematically inclined, you will notice that these are power of 3 numbers. But I would ignore the fact that they are power of 3 numbers for now. Otherwise, it sometimes can be a little bit too much detail and a little bit overwhelming. Just know that the sizes of the dealing ranges are fixed, and they are these numbers. So if you trade a bigger dealing range than the 243, you may want to look at the dealing range that is 729 pips big. Now let's focus on the dealing range that's smaller than the 243. So let's focus on the 81. So within this 243 dealing range, we can change the indicator and say we want to see the dealing ranges that are 81 pips big. Now, before this indicator was developed, I did all of these calculations in Excel. You can also do them in Excel if you would like. There is a comprehensive breakdown of the mathematics in Hoppy's official Goldbach book. So if we select a power of 3 number of 81, so power of 3 number, you can read it as dealing range size. You will see that within the 243, you have an 81 dealing range. So let me mark out this 81 dealing range. So there's 181. Okay, so this dark gray rectangle was the 243 dealing range. This is the 81 dealing range within it. This also has a high and a low. So if price is anywhere between here, then the high of the dealing range is defined as, I'll tell you the exact price, the high of the dealing range will be defined as 0.68040, and the low will be 0.67242. Now, if price fell below the low, we would reference the dealing range below it. This allows us to shift the dealing range down. So this is the dealing range below it. Let's mark it out. Okay, so this was a dealing range within the 243. This is a dealing range within the 243. And you can see there's enough space for one more. So you will notice within that 243 dealing range, there are 3 smaller dealing ranges that stack on top of each other exactly. Okay, let me just show you again. 1, 2, 3. A lot of smart money teaching tells you to buy in a discount and sell in a premium, or sell in a premium and buy back in a discount. However, smart money teaching doesn't really tell you where the premium and the discount is. Because if you have some candles that are formed here, and you suspect this is a discount, you don't know for sure it's a discount, but you suspect, where is the premium? If the candles for the premium haven't formed yet, you don't know. But Goldbach will tell you, within this 243 dealing range, the premium is below equilibrium. So let me load up the 243 again for you. Now, within this 243, we know as Goldbach traders that if we are buying in this discount, we sell in this premium because we know where the equilibrium is. Furthermore, if you think about the fractal nature of Goldbach dealing ranges and you look at the 81s, you'll see that this 81 dealing range is the premium, this one is the discount, and this one is the equilibrium. So now you are starting to get a better understanding of price, because smart money concepts give you a general overview of what you should be doing, but they don't tell you exactly where. Goldbach tells you where. It tells you where the dealing ranges are, and it tells you where the premium and the discount is, and it tells you where equilibrium is, and it tells you where the P array should form. Okay? Now, let's apply this to the charts. We put our candles back on the chart. You'll start to get a better idea of what's going on. So these are the 4-hour candles. So let's have a look at this piece of price action here. That's quite interesting, right? So if we shift this down and extend the lines to the left, this piece of price action here went through the 243 dealing range. Okay, and then if we shift the line up, once it passed through the high of the dealing range, it went through this dealing range, and then once we went through this dealing range, it referenced this dealing range. Now, if you're thinking ahead, what is the power of 3 dealing range higher than the 243? It is the 729. So this is the larger dealing range it was working in. Okay. Now it didn't fulfill the complete top of the dealing range. It didn't fill everything. That really depends on the algorithm that's running, and I'll cover the algorithms also, or some of them at the very least. Now let me show you an example of how we use this, and this will be based on two trades that I took. So after I show you the theory, I will then show you those two trades that I took, and they are videos, live videos that are recorded with running P&L. Okay, you'll see my MetaTrader 5 on the left, and you'll see the date, and you'll see the profit ticking in real time. So that way you know this analysis was not in hindsight. Please, though, do not follow me on Instagram. So my Instagram handle is on those videos. I've removed everyone from my Instagram now because it was just too much to manage. If you would like to follow me on social media, then please follow me on Twitter. That's the best place to get hold of me. Or on my YouTube. You can message me there. Message me on Twitter or on YouTube or on Hoppy's group. If you would like one-to-one access to me, though, you would have to join my private Discord group, for which there's a link in the description to this video. Let's go back to the 243 dealing range and just reduce the size of these lines because we're not going to go back that far. Okay, so this was a piece of price action which I traded. So let me introduce you to two algorithms. Okay. If you've seen my channel before, you'll know about algorithm 2, and I've had a lot of requests to go over algorithm 1, so I'll do algorithm 1 first. And algorithm 1 is one of the trades I took on this piece of price action, for which I will show you a video. Algorithm 2 is the second algorithm that I took on this piece of price action. So algorithm 1 goes from the low to the order block, and then it goes to the opposing rejection block. Okay, algo 2 goes from the rejection block to the breaker block to the fair value gap to the opposing order block. On my channel, I have a lot of comprehensive videos on algorithm 2, and I show how algorithm 2 is the OTE smart money trading model. But once you know algorithm 2, you can be a lot more precise with your OTE entries. You will know exactly where you should enter. Now, like I said, the complication with smart money teaching is they talk about rejection blocks and order blocks and fair value gaps. And I hear a lot of people have trouble finding order blocks and fair value gaps that will hold, because Goldbach tells you where these PD arrays will form. You now know the correct fair value gaps and order blocks to take. Because if the algorithm is running and you have the right power of 3, your order blocks and fair value gaps will hold. So Goldbach trading is a lot more precise. We are not shooting blind. With this in mind, let's zoom into the price action. So Goldbach says an order block should form within this order block zone. Okay. Now you may have, if you didn't know about Goldbach, you may think this is an order block because you have the impulse afterwards. Goldbach tells you where the order blocks will form. So an order block should form here. What do we have here? We have the down close candle in the order block. We call these partitions. So this is the order block partition. Okay, so there's your 4-hour order block. What is algorithm 1? Algorithm 1 says we go from the low. So this is the low. We go from the low. We mitigate the order block. Okay. So this is what we did. We mitigated the order block. And this is where I entered my trade. You'll see in the video. And where do we terminate? We terminate at the bearish rejection block. Where is the bearish rejection block? Here. Here, precisely here. Okay, there is your order block, your bearish order block. There is your rejection block. Where did I exit the trade in the video? I exited here. This was a 10R trade. You'll see that it was a 10R trade. Okay, so that's the first powerful aspect of Goldbach. We know which PD arrays are the real ones that we should trade. So with algorithm 1, we start from the low. We mitigate the order block. And we terminate at the bearish rejection block. Now, you have to have good risk management and you need some wiggle room. I had a 10R trade. You'll see it in the video. Mine was a 10R trade. Now, if you don't trade the 4-hour time frame, i.e. you don't trade the 243 dealing range, how could you use Goldbach? You could use a fractal dealing range. So, you may be someone who trades the 81 power of 3, or a dealing range that's 81 pips big on AU. So there are 3 dealing ranges. There's the premium. There's the one at equilibrium. And there's the one in the discount. Now, something that's important. Even if you are trading a fractal power of 3 dealing range that is in the equilibrium, you're not buying at equilibrium. You will still be buying in the low of that dealing range and exiting at the high. And the low of this dealing range is still in the discount of the 243. So don't necessarily shy away from putting on trades here. Now, I will hide some of this to make it a little bit easier for you guys to see. This is the second trade that I put on. And I'll show you this trade also at the end of this video. Okay, so this was an algorithm 2 I took. Let me just run the candles back so we can see the lines. And we're concerned with the price action here. Okay, so right now, I forced the indicator to show me the dealing range below. But I want the dealing range here because this is the price action we're concerned about. By default, the indicator will always show you the dealing range around your current price. So the spot price for this chart is here. So it would show you the dealing range for the price here, which is the low and the high. Okay, so how would you trade this? Okay, I'll show you on a higher time frame so that the candles are a little clearer. Okay, so what does algorithm 2 do? It goes from the rejection block to the breaker block to the fair value gap, and it terminates at the opposite order block, the bearish order block. Okay, this is the other trade that I put on, for which I'll show you the video. Now we'll have to go to a smaller time frame to see this price action, so bear with me. So there is your fair value gap in the fair value gap GB level. Okay, this is a special candle. It's called a hippo candle. But this is your fair value gap partition. These are your fair value gaps, okay? With a hippo, you can consider this as one fair value gap. So if you go to a higher time frame, this will be one fair value gap. But the concept of hippos are powerful because if you can identify a hippo, you will know that the wicks of the hippo will not be violated. They will act as support. Okay? Let's run some analysis. In the middle of these two candles, this is the fair value gap GB level. This is your hippo. This is your fair value gap. This is an advanced concept for which there's a detailed description in the book. There you go. Price label. That is the middle of the hippo. Between the two wicks. What was the low? Exactly the hippo. Now, let's mark some more things up. Let's go to a slightly higher time frame so I can start showing you the PD arrays, because these 5-minute candles might get a bit tough to see everything. So these are your order blocks, okay? Within the order block level. Now, the thing with candles is they can go over the lines a little bit. You just have to know the right time frame where everything took place. But there's your order block in the order block level. Your fair value gap I showed you on the 5-minute. There's your breaker. Can you see? That is the breaker. So if you're a breaker trader, that's what you reference. If you use normal smart money concepts, you have no idea what your breaker is until it's too late. You may think this is the breaker, okay? Or you may think this is the breaker. Goldbach tells you that this is the breaker partition, so this is the true breaker. In here is the true breaker, okay? This is equilibrium. We don't buy at equilibrium because we consolidate at equilibrium. And this is where I terminate the trade, just before the bearish order block would form. So we come out, or we enter as PD arrays are forming. We don't wait for a PD array to form. We know it's where it's going to form. So we know the bearish order block will form here. So we just come out at this exact price. We don't need candles when you trade Goldbach. Okay? Now, final thing, extensions. Let's go over extensions. An advanced concept, but it'll help you to kind of start putting this together. So going back to the 243 power of 3 dealing range. So if price is here, this is the low of the range, this is the high of the range. This is the extension. What is the extension? Now remember, Goldbach is fractal. This is also a dealing range on a lower time frame, but it's special. So instead of it being the 81, it is 2 down, it is the 27. And let me just move these date boxes up so we get around here. So if price was here, you would see the dealing range on the 27. There we go. You can see how it fits. So even in the extremes of a dealing range, if you were short and had a short bias, a bearish bias on the Aussie dollar, at the top of the dealing range, you could have found a nice little fractal algorithm 1 or algorithm 2, got yourself in, and then maybe held it all the way down. So do you see now the power of Goldbach? I've tried to keep this video brief and concise so that you can get up to speed very quickly and get an understanding of Goldbach. But if you would like to know how to use Goldbach and get more information, then there's a link to the official book in the description to this video. If you would like to join my Discord community, where I teach the Goldbach Golden Bullet, my own personal trading strategy, then feel free to follow the link below. I'll now show you those 2 trades that I took. Algo's 1 on the 243 and Algo 2 on the 81. In that way, I proved that this analysis was not hindsight.
Well, I mean, the goal was to win a championship. You know, it wasn't to win MVP or anything like that. It was to win a championship. So, from that aspect, we failed. What we have to do is continue to work. I mean, that's really the key, is understand that this isn't guaranteed to anybody. I mean, there's people who've gotten here before and never gotten back. So it's important for us to understand that, to work hard, and come back next year ready to go.